Dow is within striking distance of moving to a new all-time high above the December 4th peak. Watching that with great interest because it very well could be that the Dow ends up forming a divergence with the transports as it did at the 2022 top. So I'll be watching that with tomorrow's close, and then also going into next week, do we make new highs? Remember, it was the Dow's top and bottom that really helped us know we were going to get a correction and a bottom. The Dow and the Russell really gave us some great signals, along with the Fear Greed Index and other things. The Russell had a rally today, but it's struggling at that 50-period moving average. I believe the Russell's already peaked, and I believe it will end up diverging with the S&P. But again, the bullish and the bearish divergence has really played out very nicely for the Russell, and the Russell tipped us off to that January bottom at bouncing off its 200-period in the trend line. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. Take a moment to do that. I would really appreciate it. I just put all the information out there for free and just ask that you do what you can to help out. If you could take a moment to do that, it would be very, very much appreciated. I thank you for your consideration for that. Candle of indecision as well today on the VIX, and again, we'll be watching a bigger pullback with the S&P, or is it done? We got the inflation data tomorrow as a 10-year yield is right at the 50-period, very, very oversold. So we'll be watching to see what happens with the PCE data. Give us a rally? Does it give us a sell-off? What about earnings? What about Apple's close by tomorrow? Trying to rally right now in after hours. We'll be watching to see how we close out the month. Getting Apple in after hours, and it was a miss, but we had Tesla earnings. They ended up rising by nearly 3% for Recession. IBM rose by nearly 13%. We're watching the Dow closely with that. But Microsoft sold off for the session. It was down over 6% for the session on earnings. We had Meta come in 1.5% higher, and it was Meta and Tesla that really helped the market today. Microsoft was a drag. And then we got Apple. Now, Apple misses on iPhone revenue with an 11% drop in China sales. Now, they beat on earnings per share. They beat on revenue, but it's that iPhone revenue that they missed on. Now, for the session, Apple was up. Apple was down slightly, down 0.75%. In after hours with earnings right now, it's pretty much flat. It's down 0.29% at the moment. It was up briefly. Now it's down briefly. We'll be watching to see what it looks like come tomorrow's close. Does that impact the market? Another push down or not? Or have we bottomed with Monday's low? That's what we're watching. The Intel earnings as well. Intel was up 1.32% for the session, and then in after hours, it's up another 1.40%. So we'll be watching to see as earnings season continues, did we get the pullback and it's now over, or is it not done yet? We'll be watching. But the market was up today. The Dow was up 168, almost 169 points there, up 0.38% to 44,882. The S&P 500 was up almost 32 points, up just over 0.5%. We're still holding above that 6,000 area. 6,071 was our close. The NASDAQ was up about 0.25%. The Russell was up over 1%, the best performer of the four. And the VIX was down 4.35%, back below 16 at 15.84. And on January 9th and 10th, I told you we were going to bottom the following week. I told you we were going to hit the support trend line and probably likely fill this gap and bounce off of this gap fill area and our support trend line from 2023 at that same area. We slightly moved below it and we rebounded. That happened. So I told you again, I was looking for that bottom. It happened. And we got the CPI rally, and then we got the breakout of the bull flag ahead of Inauguration Day. And I told you I thought Inauguration Day would be a continuation of the election rally. I think so far that's being proven correct with our bullish divergence ahead of the election the election results there. And again, I think that we're in the final phase of a blow off top. I told you, though, with this rally that we are eventually going to pull back and back test this trend line. Now, we came close to it, didn't quite reach it. That may be it. But my guess is we still might see a divergence develop here on the RSI and maybe on the MACD here in the 60-minute time frame. Now, I'm looking to see if this move is done or if we have an ABC move. And again, maybe we come up a little bit higher here and try to fill the gap and then go down and then do that. Or maybe we just turn down and then again try to get a back test of this level. Now, again, it did already reach this area in after hours. Okay, so need to keep that in mind too. But I'm just telling you here on the S&P cash, in the actual session, we have not reached it, and we still may do it. But I believe that even if we do sell off further, you got your 50 getting now back above the 200 here, and you've got that the 10 period now getting back above the 50 on the daily. Even if we get a bigger pullback, I think you're going to set up a higher low. But I'm looking at the Fibonacci retracements. I'm looking at the gap fill here, and I'm looking at the upper boundary of the trend line. Again, these divergences, and just zoom out a little bit further here so you can see them. I mean, they've been nailing the turns. I've been talking about these divergences. This divergence tipped me off that we were going to have an election rally. It was right. Okay, and then I told you at the top, we were going to get a pullback. We pull back to gap support. Then we resume the advance. We get the higher high in December, and we formed another divergence. These divergences have been nailing the turns. Then we formed the triangle. I told you to be watching which way it breaks. We broke down with the Fed, and we got another bullish divergence that gave us a bounce back to back test the lower boundary of the triangle, and to back test the broken trend line of a rising wedge that broke down in the daily time frame, which I believe is expanding now into a larger rising wedge pattern. More about that in a little bit. Formed another bearish divergence. We talked about that, and I told you we were going to pull back. And then again, multiple point divergence began to form, and I told you we turned off of this trend line. We were likely forming a bull flag. Everybody was saying, "Oh no, we have a head and shoulders, and we're about to go." And the herd, or some of them anyways, started getting very bearish at the bottom. They weren't bearish back up at the December high when the signals were warning we were going to get some kind of sell-off, and then we broke down here on the triangle, and we continued. And I told you if we got a downward break on that triangle, we'll get a bigger sell-off on the Dow. We'll get a bigger sell-off on the Russell. The day that the NASDAQ peaked is when we had that break, and that was the previous Fed meeting. So again, and the Dow and the Russell, by the way, have really given us some good information on the tops and bottoms, really especially the Dow, the December peak and the January bottom. Nevertheless, I digress. We had the bottom, we had the breakout, we had the rally. Everything is predicted, but I told you, again, you're either going to go just above this level and get a pullback, or you're going to pull back just under it. We pushed above it, and we began to pull back, and we had the deep seek sell-off there on Monday, gapping lower, back to our 200-period moving average here on the 60-minute chart. We've now rallied back up. Again, maybe we fill this gap and pull back. Maybe we just start pulling back here. We'll see what happens with Apple come tomorrow's close and during the session. But do we form a bullish divergence on the RSI? And maybe the MACD, we'll be watching. And again, if we do get another push down, and I drew this curved trend line pointing to where I thought it would go before we ever had the sell-off, and I told you I thought we'd back test here and fill this gap at 59.38. That gap is our breakout gap of the bull flag. So again, I don't know that it's done. I'm telling you what I think. I have the guts to tell you what I think. I could be completely wrong. Maybe the bottom is in. And again, if that's the case, I'd like to see a little bit more evidence of that. I remain bullish on the S&P 500, believing we're going to go higher and clear this area here. The question is the pullback done? My guess is it's probably not. I could be wrong on that. You know, I was very certain that we were going to get some kind of sell-off in December. Told you about that. I was very certain for bottoming at the January low. Told you about that. I was very certain that we were going to get a pullback in this area here, either with the higher high or a lower high up with the December peak. And the divergence, we talked about that. I told you a divergence may develop, ended up doing it. Same thing here, divergence may develop. So again, here, I was pretty certain about these turns, along with our November rally over here. But here, I'm not so certain that this is done. So again, while I predicted the sell-off, I still think it's possible that we come down to this area. Again, I could be wrong on that. Maybe it's over. But I'm just telling you what I think. Regardless of whether we get a bottom here or whether we get it down in here at a deeper Fibonacci retracement, maybe the gap fill, again, remains to be seen. But regardless, I think the S&P is going higher once this pullback is done. So that's what I'm watching for. Now, I believe that we're in minor wave 5. I believe that we have this first subwave done of minor wave 5, and I think we're either we completed it here or it's still under construction down in here somewhere, and then I think we're going to resume the advance with wave 3. So when wave 2 is done, whether it's done here or whether it's done down here, we'll see. Keeping with the S&P 60-minute chart, here we go. Just want to show you, again, the gap fill directly overhead is at 6101. Okay, we moved a little bit above that 6100 area. Remember, the peak over here was at 6099. Moved just above it in that low 6100 area. We formed the negative divergence on indicators like with the RSI, and then we had that deep seek sell-off right here. We didn't quite reach the upper boundary of the bull flag here. We still may do it. And again, we haven't even gotten a 50% retracement of the advance over here. So again, going to be watching to see if we end up getting a bigger retracement. I think that's very possible. Could be done. I could be wrong about a deeper retracement. I'm just telling you, I still think it's a possibility here on the 60-minute chart that we come down and we get a larger Fibonacci retracement. If we come down to back test, we could fill the gap and we can hit this 5909 area, which is our 61.8 Fibonacci of the entire advance. That's very possible. Or still possible, we get a bigger move into the golden pocket, which is between the 61.8 fib and the 78.6 fib. Make an attempt to fill this gap. I don't know that we do that, but I still think there's a possibility that we get a bigger back test. Again, if signals begin to turn back to bullish on things like Nvidia and some of these earnings that we're getting, if we can see the stocks that got very, very oversold on Monday attempt a bigger rebound and bottom out, then maybe we bottom out here. But my guess is that, again, there might still be the need for more work to be done. We'll be watching. So again, I called these other turns correctly. Let me just zoom out here. Again, the bottom and the peak and the bottom over here in November. Again, and this predicting this pullback. Again, I'm just telling you straight up. Again, I'm not sure that it's done yet. It very well could be. I still think we get a bigger pullback, but I'm just telling you, I could be totally wrong about that. So just want to make that clear. You know, you look at the charts and you decide what you think. We do go higher. I'll be watching this gap fill area. Do we fill it and then come back down and go lower? Or again, is this low going to hold? We not fill it and we pull back first before we end up filling that gap. We'll be watching to see how this unfolds. But look, I think we go higher. The question is, the pullback done? This is a short-term price fluctuation. The main movement is higher. Off the major trend line down here from the 2023 low. I think we're going to continue with minor wave 5. I think this is the subwave 2 of minor wave 5, and I'm not sure that it's done yet. I think, again, it may not be. This is a short-term price fluctuation, and I'm looking at the main movement, the bigger swing move. We've had a big move up here. When I called the bottom here, had a big move up here, recovering very quickly. We may have to have more time to digest that move, to digest those gains. Be watching our Fibonacci retracements. We haven't even hit our 50% retracement. Maybe we don't, but I'm just watching my Fibonacci's very closely. 60-minute chart signals have just been nailing it. Let's see if we get a divergence on that RSI or not. Have to form a bullish divergence, but we very well could. Show you that chart just real fast. We're going to get the Fed's favorite gauge of inflation, the PCE data. We're coming down to the 50-period moving average here in the 10-year. We'll be watching to see if it bounces back. I'm watching to see, will this high hold at the resistance zone and our trend line here? We just slightly overthrew it, the black trend line. Or do we end up trying to go back up and end up coming up into this area here and getting a double top? That's possible. But again, I think that we're going to end up seeing another push higher on the S&P. It might be that we've peaked on the 10-year and Eventually, the S&P and the stock market joins the 10-year. If it has in fact peaked and we start moving lower, eventually it will. If we do get that higher high scenario, the RSI could end up forming a divergence before all is said and done. I don't know that it plays out that way, but I wanted to bring it to your attention. We are about to get the inflation data tomorrow. We'll be watching to see what happens. Let me just bring up the stochastic here just to show you as we're hitting the 50-period moving average, we are becoming very, very oversold. So again, it may be we attempt a rebound surrounding that 50 period. Could be we attempt a rebound surrounding the PCE data tomorrow. We'll be watching. Something that might give us the rally or the sell-off could be the Fed's favorite gauge of inflation coming out tomorrow. We're going to get the PCE inflation data before the market opens. We'll be watching that. Month over month is supposed to be up 0.3%. On the core, it's supposed to be up 0.2%. Year over year, the headline number is supposed to come in at 2.6, previously at 2.4. We'll be watching if these things come in line with these numbers come in line with expectations or not. And then on the core, year over year, expected to be 2.8, which was what we had the previous reading. One other thing, we did get the GDP for the fourth quarter. Now, the GDP was supposed to come in at 2.5. This is fourth quarter. The first estimate came in at 2.3. It was supposed to come in at 2.5, so it missed. And the 2.3 is lower. The 2.3 is lower than the previous reading that we got at 3.1. Now, we are getting slowing from quarter to quarter with the data, 2.3 previously 3.1. We are getting slowing. We had that previously in early 2024. We had that in 2023, but we're not going negative. Now, do we have to have back-to-back negative quarters before having a recession? No. Sometimes you get that before a recession shows up. Sometimes you get it during the recession. Remember, markets often top on good news and bottom on bad news. Watching the GDP data going forward, if GDP, two negative quarters, if we get if GDP is two negative quarters back to back, it's a possible sign of recession. We already have other recession signals flashing. The SOM rule with the jobs report that was the jobs data that we got in July, it triggered in early August 2nd, I believe. The SOM rule was triggered from the July data, telling us we're going to have a recession. Inverting of the yield curve, telling us we're about to have a recession. So again, I'm watching the GDP data very closely going forward. But again, while it is slowing, it is not yet negative. We'll be watching. It might be we already enter into the recession without having a negative quarter, back-to-back negative quarters of GDP. It occurred that way in 2007. We had already entered the recession, and we got the negative data later in 2008 with the GDP. Long after we move into recession, the MBER will tell us long after we're in the recession that it began many months earlier. Now, with the recession that began in December of 2007, we didn't get the negative quarters, back-to-back negative quarters, until the third and fourth quarter of 2008 during the financial crisis. So again, we don't have to have that signal before the recession starts, but it could show up before the recession starts. But it very well could be like 2007 that it showed up after. Now, before the recession began in 2001, we did have two negative quarters in the third and fourth quarter of 2000. The market had peaked in March of 2000, and in the third and fourth quarter, it was rebounding back up to test the high. In the topping process, we got the negative quarters of GDP in 2000 during the third and fourth quarter, right before we officially moved into recession in 2001. So it can happen just before, or it can happen after, like in 2008, after recession began in 2007. This is associated with recession, so it's something we're paying attention to, and we are now seeing a slowing from the previous quarter. Definitely something worth watching, but we don't have to have two negative quarters, back-to-back negative quarters of GDP to move into recession. It very well could happen as we're in the recession. So just keep that in mind. Pick it up what I'm throwing down. Information you're not going to get anywhere else. Now, just going back to the S&P 500, as we look for clues, again, the gap fill at directly overhead at 6101, do we hit that gap and come back down? Do we break above it? The different scenarios I've talked about. Let's look at the daily chart and see, okay, this might be the support areas where we pull back to. Where are we headed to? I wanted to show you here, we still have the bullish reversal of conditions. Even though we gap down, we'll be watching to see if that changes briefly or if it does remain green, do we recover? Now, the 10 period has gotten above the 20, or I'm sorry, the 50. It's gotten above the 50, the green line. The 20 has not yet. So there still might be more work to be done. And then we get that 20 above the 50 in a bullish realignment of the moving average trio. I call the 10, the 20, and the 50 the moving average trio. Right now, you don't have a bullish alignment yet. Again, it's likely we're going to see that happen. We got a bearish alignment here. Will it flip right back to a bullish one? If it does, then again, this is corrective, and we're likely going to resume the advance once this pullback is done, wherever that is, either here or maybe a little bit lower. We'll be watching. Now, where are we going? But I wanted to show you again, do we get a green bar continuing here in positive territory, or do we get more red bars and get a bigger sell-off? That's what I wanted to share with you on that. Do we hold above the 10 period moving average, or do we drop back below it? Now let's look where we're going. Now, again, I believe we're in minor wave 5. I believe we're getting the first two subwaves of minor wave 5, and then we're going to go higher. This scenario would take us to higher levels, to a channel, an upper channel. I've drawn parallel to this lower boundary when we hit our 2023 trend line. I drew this trend line that very day with the gap fill, and I've drawn this parallel channel. I am becoming more and more convinced we're going to hit the upper boundary of the rising wedge, which is this red trend line right here. But this is my count, should we go above that red trend line and form this channel in the daily time frame. Now, besides the channel in the daily time frame right here, I have this large rising wedge. This is a rising wedge forming in the weekly time frame. And again, the peak in July, we tagged it here in November and December, and again, I think we're going to end up tagging it again, and I think that's where the top is going to be, and then I think we're going to come down, we're going to break that trend line. That's going to validate a top, and I think we'll move towards a lower boundary of the channel and end up dropping in the weekly time frame, dropping 20%. That's where I think the Fed is going to panic. But this is where I think we're headed on the S&P 500. In all likelihood, this upper boundary, the channel, it intersects beautifully with the upper channel line of the on the weekly chart. We bounced. I told you we were going to likely fill the gap and bounce off this trend line. That's exactly what happened. This is our trend line from the 2023 low. I think we have this wave 4, the bullish breakout is the first subwave and second subwave of minor wave 5. Look at this up close. You can see the rising wedge. Again, the trend line does go back further, as we just saw in the other chart, but I think this whole thing from the August low is our the intermediate wave 5, and I think we're in minor wave 5 of that with these subwaves, and this is where I think we're headed. And I think that again, the move is not done yet. Pullback with the December, January sell-off has bought the S&P more time to go higher, failing to reach the upper channel line on the weekly chart in November and December, turning off of the July trend line right here. So I think this trend line has meaning. And if you take it further out, again, we're intersecting with that channel line in the weekly time frame. So this is what I think is likely going to be the case right here. And I think that's going to take us probably towards the 6340 area, maybe a little bit lower if we hit it sooner, maybe a little bit higher if we take our time reaching it. A number is not my target. The trend line here is my target, which is also intersecting with the trend line on the upper boundary in the weekly time frame. This larger rising wedge, if we look at it on the weekly chart, is right here outlined in black. I think we're headed to where that upper boundary is at and towards this upper boundary of the channel, and they intersect in this area or come very close to it. That's where I think we are likely headed to. I thought we bounced off this 2023 trend line, filling that gap from the presidential election. We did. I think that we are on our way to this level, and then I think we're going to top. And if we do see a peak there, I think it'll be followed again by a 20% drop, and this likely take us down to the lower boundary. And that's where I think we're going to see emergency cuts out of the Fed. And I think the Fed will end up panicking, telling us we're not going to have a recession. It shows up, they're going to panic. They always do. They didn't. Now again, I've showed you earlier in the week why I believe that Nvidia has already peaked, but Nvidia could still come back and fill this gap. It's hovering around the 200 period moving average. It could come back and fill this gap, and we could see an attempted recovery on the S&P 500 and the overall market. But sure if NASDAQ will go to a new high or not. But I think Nvidia will. And again, I believe Nvidia is likely peaked. It could form a larger head and shoulders pattern if we continue to slide down towards this key support area. Fill the gap later with a head and shoulders pattern coming back up after that. That's certainly possible, but Nvidia's dropped now nearly 24.5% from July 7th here. And again, I think it's peaked, but you could see a bounce around the 200. If we start pushing down, holding below this level, then that's going to be very bearish for Nvidia. Right now, we got a bottoming tail today, a possible hammer at the 200 period in this area. NASDAQ gets a candle of indecision. Again, it could still come up here and fill the gap and then turn down like I'm talking about with the S&P here in this video. Or again, there might be more work to be done. This trend line might be tested again. Or if we end up getting a sell-off with Nvidia, NASDAQ could still come down and fill the election gap, the election rally gap right here at 20,227, or even hit the 200 period. We never did fill that gap. So again, going to be watching. We got that topping tail in the monthly time frame. So I'm watching to see, does the December high hold? S&P recently just moved to a new high in January and is pulling back. NASDAQ did not. Continuing to monitor that monthly topping tail, and we'll see. We're going to close out the month here tomorrow, and then again, going forward, do we just kind of go sideways? This thing has not yet been confirmed. So is it going to be negated by a close or a push above this level if the NASDAQ 100 can make a new high? So watching that monthly signal, but right now, it's not looking like we're going to confirm it by the end of the month. I told you might get back-to-back reversal bars. So far, we have a spinning top. NASDAQ was up today, 96 points, up just under 0.5%. And again, watching to see, do we end up getting a bigger pullback? We have the gap right here. If we come back and don't take out the January low, you got that back right here. Should we end up getting another leg down or filling the gap up here and then getting another leg down? But if you get a bigger sell-off and you take out this low from January, then again, you still have the election gap at 20,227 that we'll be watching. You had some really nice diversions that tip us off to the January bottom. You had a negative diversions on the S&P, gave us a sell-off on Monday. NASDAQ got a lower high. They diverged right there as well. We got a lower high. Do we see a bullish divergence develop here and go maybe a little bit lower, or try to take out the January low? We'll be watching. But right now, if we go higher, watch the gap fills directly overhead. If we go lower, you got the gap fill down here on the NASDAQ and the breakout gap on the S&P 500 from the breakout of the bull flag at 59.38. So just some gaps I'm watching, and also the election gap here on the NASDAQ. Again, it is possible that the selling is not done yet. We'll be watching to see what happens with the Apple earnings by tomorrow's session, and then also the PCE inflation data. Do we end up trying to form a divergence, or again, have we formed a bottom now? We'll be looking for clues. NASDAQ got a doji-looking candlestick today at the 10-period moving average. Again, the gap fill way up here. So we're going to be watching here on the daily chart. If we do push down, do we flip back to a bearish reversal of conditions? Here we have the 10 and 20 still above that 50. Drop below the 50 on Monday. We're trying to hold above it at this point, but we're stalling right now at the 10-period moving average. Do we see the bars turn back to green and we mark a bottom with Monday's low and see a PCE rally or a rally with Apple? Or is there more work to be done here? We go back and test this lower, maybe even take it out and try to fill the gap from the election. We'll be watching.